Hey everybody, welcome to The Spread. I'm Spencer with JLN, and let's get right to the option stuff as there's been plenty going on. First, a big vol spike, and now more debate over VIX rigging? What a country! We'll get to the VIX debate in a sec, as there are a few other option stories that aren't getting the justice they deserve due to that very strange VIX whistleblower letter. First, China. China moved to curb some equity option trading activity this week. What a way to ring in the new year of the dog, am I right? I saw some zodiac expert, whatever that means, and please don't ask me why I was looking, say that in the year of the dog you should say yes to everything. Well, that's terrible advice, but clearly Chinese regulators did not get that tabloid memo. For another country story, we're heading to Colombia. News broke that Colombia is looking at an oil hedging program along the same lines of the Mexican hacienda hedge, as it's become known. The Mexican hedge is regarded as one of, if not the biggest energy trades annually on the street, though it was announced in May of 2017 that Iraq was also looking at getting into oil hedging. If Iraq jumped into the game with 25% of its output, it would supplant Mexico in terms of the size and scope of its hedging activity. Add Colombia to this mix, and some big bank trading desks have got to be salivating. Anyway, back to short vol and the VIX. Last week was the bloodbath. This week was the time to take stock of some of the winners and losers, and there were a ton of both. Headlines like hedge fund lost 25% of value in the rout have become common. But the most intriguing group of losers, as reported by the Wall Street Journal, were Harvard's endowment, Hawaii's employees' retirement system, and the Illinois State University's retirement system. This is what happens when the storyline of markets for years was the search for yield in any and all corners of the market, which meant outfits like these, historically known for safer investment practices, got trapped. Okay, so the story of the week is the VIX being manipulated. FINRA is looking into that already on the heels of a letter sent by a law firm on behalf of an anonymous whistleblower that alleged liquidity providers with sophisticated algorithms were gaming SPX options on which the VIX is calculated. Well, I hope we get a verdict on this one way or the other, because all this misinformation out there, and in the letter itself, is pretty disconcerting. There are a lot of misunderstandings of VIX mechanics in the letter, and most obviously, on multiple occasions, refers to the CBOE as the CME. All sorts of folks have come out of the woodwork, Bart Chilton, to say that they think this could be true based on anecdotal evidence and gut instinct. The other debate that reared its head regards Reg AT and traders' source code. Sounds like we're not done with this as was earlier expected. That's all for now. Thanks for joining.